Good to see you all. This talk, I was just in next door listening to a discussion about data licensing and so on that's so pertinent to what I'm about to go through. I'm going to probably reference it a little bit as we go forward. Just by way of introduction, Gavin Starks, I'm also co-chair of the National Smart Data Council alongside Minister Madders. And there's a bit of primary legislation going through Parliament at the moment which re-establishes rights around data use and access that I think is going to be quite significant for the whole area of open. Today I'm going to talk a little about one of our programs. We've also published a paper today, just an open discussion document, about how we should be positioning ourselves around data governance and AI. And the ODI has been doing a lot of work on this as well, but I think there's a really important set of conversations we need to have about the governance of data, the governance of software, and the governance of apps, and the governance of a whole range of different things, and start splitting these things open a little bit, because at the moment they're all bundled into one big conversation that tends to get lost in the weeds a lot of the time. So Perseus, which is this program I'm just going to run through today, illustrates what I believe is one of the first major smart data programs in the country. And it enables smart meter data to go from your electricity smart meter all the way through the value chain and get used by a bank to issue a loan. And so what I'm going to do is talk through how we made that happen. Because we know the tech for that isn't actually very hard. There are some annoying bits in there, like some organizations don't have APIs, but broadly it's not a tech problem. But I want to start with the outcome. I can't say who at the moment, but we ended the year last year with a bank issuing a loan to an SME in the UK based on using their smart meter data for their energy as part of the due diligence process for that loan. So this has gone through the bank's compliance people, the data rights, the legal teams, etc., and it's gone all the way through the chain. And that's quite a significant thing, because when I look at what the challenges are here, they're very much about what are the legal challenges, how do you get the compliance people to agree, and how do you get permission from the business in the middle of that? So one of the things we have already under things like GDPR is your data is owned by you. When you look at the SME community in the UK, it's 5.5 million SMEs. 4 million of them are individuals, sole traders. So GDPR already applies. But we've got to then look forward and say, how do we make this apply to businesses at scale? And in a context of permission giving, when you talk about businesses, you talk about permission. When you talk about citizens or consumers, you talk about consent. They're kind of interchangeable to a degree, but they have different legal meanings. We've got this ready now for national scale implementation. There's a number of breakthroughs we made in the last year, specifically around data protection and starting to harmonize the different rules and codes existing in the energy system already. It's a really good illustration of how complicated the landscape is that the rules that the regulator set, and the code body set, and government set don't always align neatly. So we've worked through all of that. We've given control to the SMEs, so they have to give explicit permission. And in the context of carbon reporting, which is the heart of this, which is how do you harmonize the carbon reports, we've got the banks to agree to do it the same way. That's a very simple sentence, but let me unpack it a little bit. Before we came along to do this, each bank has a mandatory requirement to calculate the carbon footprint of every loan it issues. This is relatively recent regulations. In order to do that quickly, they've basically been taking however much you're spending and just inferring a carbon number, which is, as you can probably imagine, not very accurate. So all the banks had this issue, this challenge of how do we calculate the footprint in an accurate way, because we have to, and how do we do it at scale, because we've got to do it for every loan, so effectively every customer. And not only was that not a very good way of approaching it, each of the banks was doing it a different way. So there's no comparability. So if you're trying to build trust in a system around net zero and using the data to prove it, that would be the wrong way to start. So what we've done here is we've gone to the other end of that spectrum and said, let's get 30-minute resolution consumption data from the smart meter. Let's get 30-minute carbon intensity of that energy at the time and place of use at a 30-minute resolution. So it's about as accurate as you can get. It's as close to sort of, if you like, an instrumented value as you're going to get. But that still needs to be assurable. So we've also helped the sector move from what's called limited assurance, where you can basically say, yes, there's a sort of a process, to reasonable assurance, where you can say, we trust that a bit more. The reason that's important is for the compliance people at a bank. They need to know that they can trust the information they're getting. If they can, it changes the risk profile around their lending, and they can offer loans more easily. In some cases, they're going to offer reduced rate lending for green loans. So that's a huge breakthrough just on its own. And then the mechanics of this, which I'm going to work through today, is we've got a technical implementation and the legal implementation. And wrapped up these things together, the rule book, if you like, of how all of this work is called a scheme. So we've built this out into pilot. The pilot is live now. The aim is to take it to market this year. There's a whole bunch of value points here, which I'm not going to go into detail on, given it's the end of the conference and there's quite a lot to cover. But the key takeaways is there's business value in this for everybody. There's societal value in this, and it makes things simpler, easier, and it automates it for the SME. Because we know that small businesses have no time or money to think about this, but we don't want them in a position where they're just sort of giving away their data without due protections around that. I'm going to rattle through some of this. The key thing here is about how we went about this in the first place. So how would you go about getting all of the banks to harmonize around doing carbon calculations in the same way? How would you get access to raw data from a smart meter from an energy sector that doesn't really want to share and doesn't really want to engage because they're busy doing other things? It's not that they don't have the intent to, but they don't have the kind of resource and desire to. And how do you engage with SMEs in a way that they can trust at scale? And one of the big lessons learned, I think, that we've been building on is the development of open banking, which I co-chaired nearly 10 years ago now. And that's to have really clear guiding principles to drive on collaboration and focus. And those guiding principles are twofold. And it is do one thing well and go far together. The number of times we've referred back to these is probably weekly with all of the teams. Because to do one thing well is really, really hard, because someone's always coming up with a new idea that they'd like to take forward. And technically, and it's quite often the tech people say, oh, well, you could just add in gas or water or something else into the mix. As soon as you do that, the legal side explodes, because you have a different set of stakeholders, you have a different set of opinions to consider, and you have a different spectrum of liabilities and so on. So the idea of doing one thing well to begin with was really important. The second thing about going far together, there's no point in spinning up an initiative if you don't have a critical mass. I've been part of dozens, probably hundreds now, of initiatives over the years where people have said, let's harmonize all of this work, quite often driven from a technical perspective. You come back 2 years later, and they're still arguing about the ontology or the metadata standard and so on, and there's no adoption. So we led with communication, engagement, and adoption, and simple messaging. So very clear vision statement, unlocking access to finance. This isn't just about making better reports. Better reports, in fact, is a desirable side effect of getting it right. But if we get the financial system in a position where they can de-risk their lending, that's driving the behaviors that we want. And as I mentioned, we're starting with electricity from smart meters, we're starting with SMEs, and we're starting with banks. Anything else in the mix, that's already a lot. There's over 190 people involved in this last year, 70 organizations. And so we started at the other end of the spectrum of what I see most projects starting on. We didn't start with the tech, we started with governance. And let's just work through the process here. When we look at the number of stakeholders involved, you've got energy generation, going through transmission, going through suppliers to an SME. You've got a smart meter. That smart meter data needs to be aggregated with the permission of the customer so that it can be shared with a software application, in this case, carbon accounting. That needs to be visible with the auditors and accountants. That needs to be sent to a bank. The bank can then offer a personalised loan to the SME based on that data. And you can see at the top here, there's various standards and regulators and so on top of all of this. So it's already a complex enough ecosystem. But the key thing is, having mapped this out and switched it on, it's continuous. So from a bank's point of view, you can then say, okay, we gave you a loan. Have you installed it? Has it made the difference we expected it to? So you've got a continuous, what's called MRV, measurement, reporting and verification process. And some of the banks are looking at financial incentives to say, if you deploy this faster and we can measure the difference, we'll give you a better interest rate. So this is about using the data to create a financial incentive to drive us to net zero. Again, how we go about this, we've got to bring a lot of people together to collaborate, to look at the user needs, and there's 5 pillars of activity that we've boiled out of this process. We then turn that collaboratively defined rulebook, the scheme, into an implementable contract. And that can be implemented using a thing called a trust framework. And that's at the heart of how open banking works. It's a way of verifying the organizations are who they say they are and that they have agreed the scheme. But not just on a paper level, the organizations of lawyers have signed contracts, but in machine level. So the machines have signed certificates with each other to say, we are allowed to be in this ecosystem. So once you're part of the Perseus scheme and the trust framework underpinning it, you have permission to play. And if you don't play well, you have a liability, because in the legal contracts and the scheme definition, it's a common liability framework, data rights, and so on. So all of these things together really help build confidence in the ecosystem. And then on the right-hand side here, you have the ecosystem of actors. There are over 100 banks and lenders in the UK. There are over 270 carbon accounting applications in the UK. Right? So if you're sitting there going, who on earth do I trust in this landscape? You will want to know, at least at the base level, that you're all doing it the same way and that you're signed up to something that protects me as an SME. So far, we've signed up 9 banks, major banks. I'll come on to that in a minute, and about 20 or 30 of the carbon accounting applications. But above this, and I'm talking about a lot of non-technical things, but this is what's making it work. Above all of this, we've got a governance structure. And this word governance, I think we need to start bringing into our open conversations, whether it's open source or open data. Here, what we've got is a steering group, which is populated by trade associations and government and regulators and so on. We've got advisory groups that are populated by the commercial actors. So the advisory groups work out exactly how they're going to do a thing. And then steering group can sign that off and say, we're happy with this as a market-wide intervention. There's third-party observers, and we've got different levels of oversight. But I'm just going to cut into the chase here and say who's on it. This is a really difficult thing to pull off. There's about 17 different trade associations. We've got the Institute of Directors, the Institute of Chartered Accountants, the Trade Association for the Energy Companies, the Trade Association for the Banks, the Federation of Small Businesses representing the end beneficiary in the room. And this gives us the license to go and talk to the commercial sector as a national initiative. Government has supported this in different ways, not in funding, but in politically. It's in the Green Finance Strategy from the prior government. We had a letter of support from Minister Madders in DBT, Department for Business and Trade, supporting this as a smart data scheme. But you see, we've also politically aligned it with some global initiatives. So this is under the UN GFAN's Net Zero Banking Alliance. And because of that, we've got observers that include the OECD and the International Chambers of Commerce. There is absolutely at the heart of this an ambition to take this global. And some of the banks who signed up are already global actors. So we think we've got the rails to do that. These are some of the commercial actors that have signed up. So we have got Lloyds, Barclays, NatWest, some of the challenger banks in the tent today. The British Business Bank have been a huge supporter of what we're doing, and the Welsh Development Bank have come on quite recently as well. So that's at the money end of the spectrum. On the right-hand side here, the carbon accounting providers, well, you probably see some familiar names in there. Sage, Intuit, and Xero are the accounting package that the vast majority of SMEs already use. So by baking it into their existing process, we can make this easy for people to opt in via their existing relationship. So as an SME, do I need to go out to market and work out what the hell's going on? Well, I can if I want. There is quite a large marketplace around that. Or do I just get presented something by my bank, my existing, who is an existing provider, or by my existing software company? And so this is all about reducing the friction for the end SME. The way, just to dip into how this actually works under the hood, so on the left-hand side, you've got this collaborative process with the steering group and the advisory groups populated by all commercial members. And at the heart of it, we've got this trust framework service, which we've built as an open source stack. So we had been working with some commercial vendors in the mix that had a background in open banking. What we learned is that the open banking approach was probably too heavy for what we wanted to do here. And we wanted to create something that did less, actually, than some of the open banking stuff does. So at the heart of it, the trust framework really does a very small number of things. It does validation of who the organizations are. It does registration of the API endpoints, so you've got certificates that can be shared with each other, and it codifies the scheme. So on the right-hand side of this, if I'm an accounting application and I want to get access to smart meter data, so the data source here being the route to a smart meter, and the application being one of the accounting packages, both the application vendor and the source can check back into the trust framework that they're allowed to share data. But they ask the permission to the customer. Once the customer is given permission, which doesn't sit in the trust framework, the data can go peer-to-peer. So the data is never centralized, it's never cached, we never see it, it never touches the trust framework. It goes directly from the data source of the energy data, in this case, into the accounting application. They then generate a carbon report, and then that can flow up the chain. So it's an exercise in doing as little as possible. And as we go forward on this, we need to do less and less, or keep doing as little as possible. Everything we do, we publish as open standards. These are all on the website today under a Creative Commons license. And that includes high-level reports, kind of executive summary, as well as all the detail, including the legal contract that everybody signed. So again, as part of the breakthrough I think we've made over the last year has been to clearly define what the purpose of this is, how to legally ring-fence the data sharing, and to get it to the point where a bank's legal department is happy to sign it, and a software company's legal department is happy to sign it. So we're really excited by this because I think it sets out what good can look like for smart data schemes. We've also designed the legal framework in a modular way so that when we come to the next use case, now whether that use case is beyond banking, could be into insurance or asset management or other categories, credit rating, and so on, or whether we go upstream into enterprise or downstream to domestic, or whether we go international, or whether we go from energy to water to agriculture, whichever dimension this expands in, the foundations of this are pretty much common. The variation will come on the specific data that needs to be shared, and again, for which purpose. And that, unless you've defined the purpose, you can't define a contract. So our ambition here is, rather than a race to zero, have us rise to zero and catapult us into a net positive future. And I will wrap up there. If you want to join, we've got a network that you can join, a like-minded bunch of data experts and fellow travelers. If you just scan that QR code, you'll see a sign up and some links. Thank you very much.
Thank you, Gavin. We've probably actually got time for one question if anybody has a question that they're burning to ask Gavin. Yes, I'll bring you the microphone.
Brilliant.
Unrelated to data, but on the structuring of these loans, is the lending criteria exclusively on the energy usage, the quality of energy, or is it something else as well?
So for this example, it's part of the due diligence process. Okay. So they got 12 months historical data at 30-minute resolution to create a benchmark. Right, so that's the starting point for saying, okay, we're going to invest, we're going to give you a loan for some net zero infrastructure, which will reduce your carbon intensity. So using that as a benchmark, they'll be able to measure in whatever period of time they want to check it in. It could be 6 months, could be a year. Did it actually make the difference? And the foundation piece here, I think, is really important. Yes, there are the usual criteria for lending also apply. You know, are you a credit-worthy organization and so on and so forth. This is in addition to the existing lending criteria. The key difference that it makes for the bank is that before they had very low confidence around whether or not the loan they were making was actually going to be net zero or could be justifiably net zero. So the cost of lending was higher. So when a bank's making a loan, they have to assess the risk and say, well, what happens if it doesn't deliver what it's meant to? And so we're at a bit of a crunch point. You probably have seen in all forms of ESG reporting, environmental, social, and governance reporting. There's a huge backlash because people either don't trust the data, or they don't think it's measurable or quantifiable, or in some cases they're actively against it, but looking across the pond right now. But I think what we're really doing here is kind of looking through the other end of the telescope and saying, rather than trying to measure everything, which a lot of these top-down standards do, can we just measure one thing really well? And is that good enough for a bank? And our feedback so far is, yes, super, right? So now, can we roll that out across portfolios? Can we start that data flow coming in? I think one of the opportunities in the mix there is, as people build confidence in the veracity of this information, they could take higher risk on more unproven technology, for example. If you're not quite sure if there's enough evidence for some intervention in agriculture or something like that, you say, well, we'll give you a 2% discount if this works. And if it doesn't, okay, well, we both shared a bit of risk.